Now, CoreLogic did a study a while ago which looked at the performance of the 7 capital cities in Australia, so the 7 metro markets, with the 7 largest regional markets throughout Australia over a 20-year period. Now, what was found was crazy. Most people end up buying their investment properties really close to where they live in a market where they feel super confident and comfortable. But as an investor, what we're trying to do is get the best return on our investment over the longer term. So in today's video, I'm going to break down how you can identify the right market to invest in. I'm going to talk about the key drivers of capital growth. I'm also going to talk a little bit about history, which can paint a pretty interesting picture to help you select the right market to invest in. One of the key things that all investors should be focusing on trying to target with their investment journey is capital growth. Capital growth is essentially what's going to drive the price of the properties that you purchase up, and it's going to help in so many different ways. It's going to help you continue leveraging into more properties. It could potentially help you pay off debt. It's also going to make you pretty damn wealthy as well. So some of the things that really drive that capital growth is people. It's population growth. If there's more people in an area, there's going to be more demand for them to want to be buying those properties. Another thing is jobs. You want to be in an area where there's consistent job growth and also quality jobs as well. Another thing is infrastructure growth. In areas where you've got lots of different infrastructure projects going on at any given time, public transport options, major upgrades to arterial roads, upgrades to the airports around town, the things that make an area really livable is what you're looking at. And then we also have those lifestyle factors. People that obviously want to live by the coast, by the beach or a river, any sort of water in Australia is desirable. Cafes, restaurants, good schools, all of these things need to be taken into consideration. So understanding these key drivers can really help. But I think history paints a super interesting picture about what has happened in the past and what could potentially happen in the future. So when you look at the historic performance of certain markets in Australia, we look at the metro markets versus the regional markets, because this is the first way to identify the right area to invest in. Now, CoreLogic did a study a while ago which looked at the performance of the 7 capital cities in Australia, so the 7 metro markets, with the 7 largest regional markets throughout Australia over a 20-year period. Now, what was found was crazy, and this was that the metro markets have outperformed the regional markets by 85% over the last 20 years. So this alone is a really good way to help you identify those right markets. And when you logically unpack this, it makes a lot of sense, because the metro markets typically are those areas that get the good population growth, that have the good quality jobs, and get the really decent infrastructure growth as well. So that's a really important one. But then when you look at these major metro markets as well, we sort of saw an article from a company called Homely where they looked at the year-on-year performance over the last 50 or 46 years in Australia. And basically they looked at Sydney, they looked at Melbourne, they looked at Brisbane, and they looked at Perth. And what was found is that over that 50-year period, Sydney, Melbourne, and Brisbane had all increased by over 9.5% on average, which is just insane. And I'm personally not expecting that to continue into the future. But those areas had received some significant growth and outperformed those other capital cities over that period of time. And if you were to look at the last 20 years, those 3 markets, Sydney, Melbourne, and Brisbane, have all increased by over 6.5% as well. So once again, really strong performance there. And then when you look at the historic population and job growth, the ABS actually indicated that 75% of Australia's population and job growth has been concentrated in Melbourne, in Sydney, and in southeast Queensland, with the remaining 25% dispersed through the rest of Australia. So once again, those are the key drivers of that capital growth. So those are the areas that we really like to be focusing on. The ABS actually predicts that moving forward into the future, Sydney, Melbourne, and Brisbane will continue to get about 75% of Australia's population and job growth. So these are the areas that we really like to invest in. There's also timing that really comes into play, but I'm not going to unpack that in today's video. We'll definitely get to that in another video, which will help you understand, okay, once we've got the markets, now which market should I be focusing on right now? In terms of other markets or alternatives that we don't really mind looking at, is the major regional markets surrounding the major metro markets. So we're thinking the Sunshine Coast or the Gold Coast, so the north and south of Brisbane. We're thinking the Central Coast and Wollongong, north and south of Sydney, also really great areas longer term. And then down in Melbourne, the Mornington Peninsula and Geelong also have a lot of potential longer term, because those types of areas have those lifestyle factors that sometimes the cities don't provide for you. And in this crazy world that we're living in right now, some of those lifestyle factors are really important. And also the fact that a lot of people may be able to work from home moving forward could mean that these regional markets can do really well. Right now, we see so much value up here in Brisbane, on the Gold Coast, on the Sunshine Coast. Things are looking really interesting up here. Prior to COVID, there was insane interstate immigration moving up to Southeast Queensland. We've also heard some really interesting information from a friend of Lisa's, who said that when she looked at moving to Southeast Queensland from Melbourne, she got told from the government that there's 20,000 applications for people in Melbourne alone that are looking to move up to Southeast Queensland as soon as the borders open up. So that population growth is really going to help. We've also been through a huge infrastructure boom recently, with the Brisbane Airport and Sunshine Coast Airport having their upgrades, lots of train stations being refurbished throughout Brisbane. They've upgraded the major arterial roads, and they're doing a heap of other infrastructure projects throughout Southeast Queensland as a whole. Actually, about $42 billion worth of infrastructure projects are approved up here at the moment, which is amazing to see all of these things happening. So it's kind of changing, the tide is definitely changing, and that's why I really like it up here. So as an investor, to ensure that you're going to get the best return on your investment longer term, you want to make sure that you're in those areas that have performed really well in the past, that are going to have that consistent population growth, the consistent job growth, and the consistent infrastructure growth. So when you're creating your strategy, when you're creating your plan, make sure that you're not emotionally drawn to the area that you grew up in or the area that you know really well. Make sure that you consider everything. Consider being a borderless investor so that you can set yourself up properly, so that you can get into the right markets and smash that capital growth. Thanks so much for listening today, guys. I really appreciate it. Please give me a like, please subscribe, and once again, thanks for listening.